Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to our channel, everybody. Today I'll be teaching you my 5 minutes trading scalping strategy. I know you guys like scalping, so I will teach you my 5 minutes trading scalping strategy. Okay, I actually wanted to reserve this particular video for my webinar students, but I decided to just teach you guys here on YouTube too. Okay, so without wasting my time, let's go to the charts and let's see how you can trade with the 5 minutes candles.
So, what is scalping? Scalping means entering and exiting the market within a short period of time. It may be seconds or it may be minutes, okay? Mostly scalping is done on the M5 time frame and the M1 time frame, okay? Mostly we do scalping on a 1 minute time frame and then 5 minutes time frame, because these are the shorter time frames. You can also get 2 minutes time frame because you can customize your time frame, okay? These are by default. I have 2 minutes here. You can just customize it anyhow you want. I have always been telling you that whatever you see on the chart can be customized. Okay, so don't get worried when you see somebody's chart with a different interface and you get scared. Okay, all these ones I just customize them here. I just decided to put my watch list here. Okay, so anything you see on somebody's chart can be customized, but always focus on the candlesticks. The candlesticks are the important thing, not even the colors. How the candlesticks passing are formed. Okay, so we can trade the scalping strategy on M1 or M5. Okay, but I prefer always trading with the M5 5 minute time frame because that one is not too fast and it's also not too slow, but it can give you ample time to think and make a decision. Okay, this strategy is very simple and very profitable because if you are trading the 5 minutes candles, then you are going to get enough trade within the day. So within the month, you are going to gather enough trades. Okay, we as day traders, we are going to take samples of trade within the month. Okay, we don't take $100 to $50,000, guys. I've already been telling you, I'm warning you about those guys. We don't take $80 to $2,000. No, as day traders, that's not how trading is done. We are gathering enough sample of trades. Let's assume that within the month we are able to take 30 trades. We are able to take 20 trades. We are able to take 50 trades. It depends. If you are trading the 5 minutes strategy, then you can take 30 trades. You can take 40 trades. Okay, within the month if you are consistent. If you even not consistent, let's assume that within the month you take 20 trades and you have 10 losses and 10 wins. Net when you deduct your win from your losses with 1 or 2 risk reward, definitely become profitable, guys. You see, so most of the time we are required to take at least 30 trades, okay, within the month. Let's say a day you find 1 trade to trade. It's enough, guys. It's enough to make it profitable. Around the month you can make a profit like 30,000 3,000. Can make a profit like 5,000. After you've deducted all your net can make profit like 10,000 if your account is big. So day trading is very easy and lucrative. Okay, so let's continue the strategy. So this is very profitable and very easy to trade, but you must know the rules of the game. The first rule of the strategy is that you must first identify a trend. How to identify a trend? What is a trend? A trend is what? It's defined by a series of higher highs and higher lows, right? So if it's an uptrend, we have higher high, another higher high to tell you that it's a trend. So now we are in a trend right now, right? In a trend. Good. And this higher lows, higher lows, higher lows. So we're in a trend. But guys, do you think it's easy like this to spot a trend every time? Tell me, do you think it's easy to spot a trend? It's not easy to spot a trend, okay? So how do you know a trend is beginning? When the chart is like this, when the market is now about to play, guys, can you tell me? Now, can you find any trend? We are going this side, okay? Can you find any trend here? Can you find, guy? Can you find any trend? It's very, very difficult to spot a trend, right? At this particular zone, can you find a trend? You can't find a trend. So when the market has already played, then we YouTubers will show you, oh, it's a trendy market, so buy into the trend. But when you go on your chart, in raw life, you don't see any trend there, because in raw life market, it's very difficult to spot the trend. So this is a rule of thumb. To spot the beginning of a trend, we are looking for 2 things, okay? We are looking for the market to give up move, okay, retrace back, and give us another power move. We are looking for this Z pattern. When you find this Z pattern anywhere on the chart, it means there is a beginning of a new trend. And how do you know it's a beginning of a new trend? See, because the high was taken, and the moment a high of a pattern is taken, it means we are going more higher, okay? Which means that we are waiting for the market to retrace back to this zone anywhere, and then we will take the market up. So now you see, now it's very clear that you can see it is a trend, right? But initially, did you see it was a trend? No, you can't see it's a trend, right? You can't see it's a trend because initially you not see anything. Like here, what do you see? Do you see any trend there? You can't see, but you can see the Z pattern, right? You can see power move, you can see retracement, and you can see another power move. So the moment you see this Z pattern, no matter where you are on the chart, you must put in your mind that there is a emerging trend. Okay, so far the high is taken out, this high is taken out. Put in your mind that there's going to be emerging trend. So this is how you spot a trend from the beginning. But when the trend is already formed, guys, it's very easy for you to find out. So this is a trick. You find the Z pattern on the chart, everywhere on the chart. And when the market will trace back to this zone or anywhere around this area, just retrace, then you know that that's where you're supposed to enter and trade the market. Okay. So same on downtrend. On a downtrend to the same thing, you're looking for the same pattern. We're looking for a power move down. We look for a retracement, and we look for another power move down. The moment this high is taken, you see this Z pattern, which means now we are beginning a new trend. Okay, a new trend is emerging. So because the high of the low is taken, so you're waiting for the market to retrace back to this zone, and then we will join the trend. And now you can see that it's a clear trend. So YouTubers do what? They draw trend line for you to see, wow, this is a trend. Buy when it touches the trend line, right? But from the beginning, it's very difficult for you to spot. So this is a trick, okay? This is a trick. Identify the Z patterns, and then you sit down and you wait. You sit down and wait for the pattern to emerge itself, and then you join the trend. So this is for a downtrend, and this is for an uptrend. Anywhere you find the Z pattern, can you see Z pattern? Anywhere. Then when the market you trade, the market goes up. If the Z pattern does not form, guys, you don't take any trade, okay? But to give you a helping hand, we use trend lines or moving averages to just help you to identify the trend easily. Because sometimes it's time consuming to just sitting down and watching the chart, okay? So it's better you have some things on the chart that will help you just to make your analysis quick. So we are going to use moving average or trend line to help us to just be a guide, but not to tell us the trend is forming. They are going to just be a guide for us to know the direction of the trend. Okay. So first we have identified the direction of the trend. So this trend has already formed. So let me draw for you to see, just like as everybody does on YouTube. Okay. That's how it's supposed to be. So now we are in a trend. But sometimes it's difficult to draw with the trend line. So I always prefer using moving average. So we go to insert, indicators, trend, and we go to moving average. We are inserting moving average of 50. Moving average of 50. Exponential. You can change the color to your own color. Okay, any color you want, maybe green, red, whatever. I prefer this color. So let me just leave it like that. And I press OK. So now my moving average will be plotted on my chart. The moving average is just there to tell me the direction of the trend. Okay, to tell me the direction of, it doesn't tell me when to buy or when to sell. So when the market is above the moving average, I assume that the market is on an uptrend. If the market is below the moving average, I assume that the market is on a downtrend. It's not always going to be like that, guys. Keep it in mind. It's not going to be like that, but we assume that it's on a downtrend. So the first rule of the strategy is to identify a trending market. That's the first rule. The second rule of the strategy is to trade with the trend. How do you trade with the trend? As I said, if the trend has already formed, it's easy for you to know where the trend is retracing to, right? But when the market is new, when the trend is new, is now forming at this zone, you can't tell. So how do you trade the trend? We know we have our Z pattern, okay? We have our Z pattern here, up move, retracement, and up move. Here there was news event here, guys. Can you see? News event. I've always been telling you, before you enter any forex trade, check if there's going to be news or not. Go to forexfactory.com to check for any latest news updates. Search for red news. If you see red news within the time, you don't trade any market, okay? Because no matter what you are going to trade, red news can affect your trade setup. So here there was news, okay? But just for analysis, let me just show you. So you identify the Z pattern, and then we are waiting for the market to retrace back to any of these zones, because we know that first up move, we know first up move is here. We know our second up retracement, and then our second up move is here. Waiting for the market to retrace to a particular zone. Where should we retrace to? That is when you are going to use the Fibonacci tool, okay? Fibonacci tool. To know where it's retracing up to, we can't tell. So the best tool for us to use, one of our magic tools, is the Fibonacci retracement tool. The Fibonacci retracement tools assume and predict the market retracement and market extensions, okay? I'll give you a brief history about Fibonacci later, But this is how the tool works. On any charting platform, whether TradingView or MT5, you can find Fibonacci retracement tool. Can you see? Fibonacci retracement tool, guys, can you see? If it's not there, you can customize it and bring it, okay? So Fibonacci retracement tool, and then you click on the first point, first retracement, and drag it to where the market has retraced up to. And now we get these lines. So first we have point A here and point B. So waiting for the market to retrace back to point C, and then we take the trade at point C. So A, B, and then when the market retraces back to C, then we take the trade. Before we continue, let me give you a brief history about Fibonacci. The Fibonacci retracement tool is derived from Fibonacci numbers, okay? If you're into mathematics or you've gone to college, or let's say like if you've done mathematics, you hear Fibonacci. This guy was a mathematician. He was a great mathematician. And he developed some sequence of numbers, okay? Some sequence of numbers. And this sequence of numbers can be found in nature, can be found in so many things. So those who program the indicators for trading, they also assume that, okay, if Fibonacci retracement can be found in several aspects of nature, then what if you can also program an indicator in trading? Maybe it can also assume, or it can also affect how the market moves. And truly it's true. Fibonacci retracement tools are very powerful. They are very powerful, and they tell you, they assume and they predict market movement and the retracement movement. Okay, so let me teach you a little about it. Here in the Fibonacci retracement tool, you find some points here. See, can you see some numbers? We have 0, 0. So we assume that from 100, if the market move from a point 100, from point 0 to point 100, then we are making this prediction. So these lines in the middle are the prediction lines. So on the lines, we can see 23.6 retracement zone. We can see 38.2 retracement zone. You can see 50% retracement zone. You can see 61. Let me drag it a little so that you can see it well. You can see 61.8 retracement zone, and we have 100% retracement zone. These numbers can be customized, okay? Can be customized, and the color does not matter. Fibonacci tool can be changed to different color, okay? The color of any indicator does not matter. What matters are the values of the indicator. So in this particular scalping strategy, we are going to use the 23.6 and then 38.2 only. Okay, we use the 50 and the 60, and on some other customization you can find 78 something here at this side, but I don't use it. I only use 61, 50, 38, and 23. I use the 50 and the 61 for deep pullback. I don't use it to trade scalping. I don't scalp with the 50 and the 61. Okay, if you want to scalp with the market, you scalp with only 23.6 and then 38.2. These are the values we are going to use to scalp the market. So let me clean it and let's start again. So first, identify the beginning of a trend, right? With the Z pattern. 1, 2, 3. The same Z pattern here. 1, 2, 3. And then you identify the power move, the second power move. So you can see that Fibonacci 2 is here. You drag from the A to the highest point. See, at this point, this was the highest point, but the market was trying to retrace. It did not retrace, and then it went up again. So which means this one becomes our next highest point, okay? Because the market has not retraced yet. So identify the Z pattern, and then draw a Fibonacci retracement tool from the lowest retracement A to B. Now wait for the market to retrace to C. And to know when the market has retraced up to, we use the Fibonacci tool. So let me extend it for you to see. In the Fibonacci tool, using the 23.6 and the 38.2, we can wait for the market to retrace to that zone, and then when the market gives us any confirmation, we take a trade. Okay, when the market gives us any confirmation, we take a trade. So let me zoom in. Let me zoom it in so that I can see it clearly. Okay. Oh, where is it? Oh, okay, it's here, guys. It's here. Good. So as you can see, the market retraced back to the 23.6 zone, and the market reversed. Can you see? By here, you couldn't have taken any trade. Why? Because it was weakened. Can you see it was weakened? These lines are line separation. Okay, they are period separators. I customized it on my chart. So you can also customize them on your chart. This is period separators. So this was weekend, and on Sunday, I don't advise anybody to trade because we don't know what is going to happen in the market on Sunday. So this weekend, we couldn't have still catch this trend. Okay. So for example's sake, see the market retraced back to the 23.6 level, and then it bounced off and it catch a move. Can you see? Let's move on to see the next retracement. So this was the first retracement zone that we were supposed to buy, but because it was weekend, we couldn't buy, right? So let's see the next retracement. Let me change the color, guys. Let me change the color. I like, okay, I like this color, so that it won't take much attention. The second move we are looking for is when the market moved. What are we waiting for? We are also waiting for the market to come back down because it has taken out the high. So we draw a retracement 2, Fibonacci retracement 2 at the highest point, and you're waiting for the market to retrace back to either the 23.6 or 38.2. And when the market gives us a confirmation, we take the candle and we take the trade. So as you can see, the market retraced back to the 38.2 level. Can you see? It retraced back to the 38.2 level and gave us a bullish engulfing pattern. Keep this pattern in your head. Keep this pattern in your head. Can you see? This like V pattern. We are going to take this V pattern several times. Can you see, guys? Please, are you watching? Yes, keep this pattern in your head. So it gave us a pattern. To the moment it gives us a pattern, now it's time to enter our trade. So we enter our trade. We can wait for confirmation, or we can just trade straight forward. Okay. Let me change the property so that we know that we are entering a trade here. This is an example. So okay, let me use dotted lines. So we are entering a trade. You can enter your trade somewhere here, any from this zone. You can take your profit somewhere 1:2 or 1:3 or 1:1.5, and you put your stop loss below the 50%, okay, or anywhere you think is reasonable, and then you take a profit and you're out of the market. That's very simple, guys. So you wait for the second power move, and then when the market breaks the high, you draw a Fibonacci to the highest point, and when the market retraces back to the 23.6 or the 38.2 and gives you a confirmation pattern, you take your trade. So this is our third retracement, right? Yes, this is our third retracement because the first retracement was down here. That one, we don't know the beginning of the trend, so we can't take this one. But you can take this one, or we can take this one. Now, when the market takes out the high again, which means when the market takes out the high, it means we expect the market to pull back and we buy into the trend, okay? So all this Z pattern always work anytime. Z pattern, can you see? Z pattern, it moves, power move, and then when it traces back and it takes the high, we are waiting for the market to come back down, and then we take the market up. The same way, now the high is broken, so we're also waiting for the market to come back again. So we draw our Fibonacci 2. Let me clean this, guys. So Fibonacci 2, we draw our Fibonacci 2, and then we move it to the highest point. Where's the highest point? I think the highest point is still here. Let's see. If it's still not the high, we will still extend it again, okay? So let's go and further and see. Good, that was the highest point. The market started retracing. So we're waiting for the market to retrace either to the 23.6 or the 38.2. Fibonacci is a very powerful tool, okay? Mathematics is the best, guys. Good. So let's see. So the market should trace back to the, oh, where is it? Good. So here, see what happened. The market will trace back to the 23.6, but we got a losing trade, right? Because you entered here. This is the same V pattern. Keep this pattern in your head, guys. You entered here and you assume that the market was going to buy up again, and you lost. So let's admit we have one winning trade and we have one losing trade. So let's admit your capital is you are risking $200. Let's say $100 for just easy calculation. So you are risking $100. So you first one you won $200. The next one you've lost $100. Okay, because it did not move to your target profit and it reversed back. But see, when the market came back to the 38.2, it also gave you another confirmation pattern. So this is another confirmation pattern. Can you see? So you buy again, that one to the same one. You buy, you put your stop loss at a good place below the 50 or anywhere good that you like, and then you take a profit 1:2. So the same way. So now we lost 1, we've won 2. Guys, can you see how real trading can be? This is real, okay? It's real. So the Fibonacci retracement tool can be very powerful too. But also check the retracement. You see this retracement, if it was me, I would have taken this retracement because it was too shallow. See, look at this whole power move. And look at the shallowness of the retracement. So I would have waited for it to come to the 38 if it was me as a professional trader. But even assuming you are not a professional trader, you are now a beginner and you are still losing. It's fine, you've gotten a losing trade, but still you get a winning trade to cover up your losses. So on the next pull up, let's see, let me clean these lines, guys. So on the next pull up, what can we see? So this is our next retracement zone, right? This is the next retracement zone. And so far the high is broken, we are still going to buy when the market retrace. So we still take our Fibonacci 2, we draw our Fibonacci retracement 2 to the highest point, and when they give us something around 28 or 32, they take the trade. As for me, I wouldn't have taken the trade because I wasn't clear. Okay, I didn't take out the high. Okay, so this pattern wasn't that clear because the market was very choppy. As you can see, it was very choppy. It did not retrace up to, the retracement was not clear. The retracement was not up to the 23 point. It was passing, assuming it was going to the 38, assuming it was going to the 23. So I wouldn't have taken this trade because I wasn't sure. Okay, I would have waited for it to retrace back to this zone. So I would have bought somewhere here. But he had not seen any bullish pattern. I don't like this pattern, so I would have taken this trade. And also there was a higher time frame resistance. If you go to the M15 time frame, you notice that there was a higher time frame resistance at this particular zone. Okay, at this particular zone, there was a higher time frame resistance. When you are trading, you must check all those factors. Okay, so you lose some and you gain some, but at least net at the end of the month, if you are even sorry for me to say, fool you are a loser and you lose 50 of your trades and you win 50 of your trades. Definitely, when you risk 1:2, you're definitely going to make profit, right? You took 20 trades in a month, and out of the 20, 10 were losses, 10 were wins. So 10 of them were $200, 10 of them were $100, just for easy calculation. Okay, so definitely you make profitable. If your capital is big and you can raise $500, you have 50. You have 10 of them to be losses using $500. And then 10 of them to winning $1,000. So net, I don't know much, you're going to make profit and you're going to make $5,000 or something, guys. So trading is very easy if you know what you're looking for. Okay, so the first rule of this strategy is that what you have to identify a trend. Let me clean all these lines away. So the first rule of the strategy is to identify a trend. The second rule of the strategy is to trade with the trend. Don't trade against the trend. Okay, don't trade with the trend. So the moving averages and the trend lines will help you to identify the direction of the trend. And then you enter on a pullback using Fibonacci retracement tool, the most powerful tool I've ever seen. Okay, so here as you can see, the market retrace and bypass the 50 moving average, which means we assume that the market is reversing. Okay, and if the market is reversing, it's either going to be consolidated or it's going to be a downtrend. And how do you know if it's a downtrend? Don't forget the rules. Before you can spot a beginning of any trend, you must always follow the zigzag pattern. So if the trend is reversing to become a downtrend, then you must check this pattern first. Zigzag pattern as I told you. So reverse and then you're looking for one more to go down. So if the market does not go down, then you don't take the trade. Sometimes it can be like this, okay, and then it will reverse. So the V pattern, then the pattern continues upward, right? But we're only looking for the market to break this high. So when this high is broken, then now we know that now we are in a new trend, guys. We know we are in a new trend. So we're waiting for the market to retrace back using the retracement tool. And then we join the trend, down. Guys, can you see? We join the trend down. So let's see here. Can you find the same zigzag pattern here? Now there's no trend, so we can't see this. Let me clean this guy. Don't deceive yourself. There's no trend here. Clean and clean. We're looking for this pattern. Can we see this pattern here? Let's see. One move, retracement, and another move. See, the low is taken. Can you see? The low of this pattern is taken. So let's see if it makes a move down and retrace back. We are going to enter the trade using the Fibonacci retracement tool. Good, it made a pullback. So we take our Fibonacci retracement tool. Where is the low? The lowest point is here. We drag it A to B and to C. This I don't like this break. Let me send it here. Okay, and let's see. See, the market retrace back to the 38 level and gave us bearish engulfing pattern, and the market sold off, guys. Market sold off. Very easy and very understandable, right? So rule of thumb is that always understand what you're doing, guys. I always tell you before you treat any strategy, guys, understand it. Okay, even if I teach you a strategy and you don't understand, you still have a losing trick. So make sure that every strategy I teach you, every strategy you learn from anywhere on YouTube or anywhere, make sure you understand the strategy thoroughly. You test it yourself. Okay, you tell the strategy yourself on your charts. You analyze the chart, because sometimes some strategies can be very profitable, but they don't fit your personality. Okay, when I was learning how to trade, I learned daily time frame. Daily time frame, guys. I had to sit down the whole day before one candle will form. Guys, I was bored to death and I couldn't stand it. Daily and 4 hours, guys, I couldn't stand it. So I had to drop them all and find my own way to trade using the H1 and M15 and M5, guys. because it doesn't fit my personality. So any trading strategy you're going to learn, either from me or from anybody, make sure that that strategy fits your personality, okay? If the strategy does not fit your personality, you will not become profitable, guys. You will end up losing because you can't wait, or you can't even put in the effort to study the patterns well. So any strategy you're going to learn, make sure it fits your personality, and then it fits the way you see the market, okay? There are a lot of strategies, but you have to choose the one that fits your personality and the one that fits the way you like to trade.
So guys, as you can see, day trading is not difficult, okay? Day trading is very simple and very easy, but it requires hard work, okay? But if you know what you're doing, if you know what you're getting yourself into, if you know what you're looking for, if you know what you're supposed to look at, if you know when you're supposed to look at a particular currency pair or particular asset, then day trading becomes very easy for you, okay? But if you enter the market without any knowledge, without any skill, without any analysis skills, then you're definitely going to lose your money. That's why I always advise you that before you put your money in the market, understand what you're doing, understand the concept of the market, understand which strategy you're using. Even the strategy you're using, you must understand it thoroughly, because if I teach you a strategy, don't just go and trade it directly, okay? If I teach you a strategy, understand the concept. What am I saying? Watch the video several times to understand every single thing I say, because if you miss even one element in the single thing I say, then you're not going to become profitable, okay? You're going to have losing streak and you don't understand. So it's better you understand the strategy thoroughly, okay? Take your time, study the strategy, all the strategy I've taught you, study it, analyze it on the market, and then find the one that fits your personality, okay? The one that you like. Sometimes I like to trade with the 5 minute candles, but not always, okay? Sometimes I prefer to trade with the H1 and the M15 time frame, because that one I don't need to rush to be in the market. But with the 5 minute candles, I always have to be on the watch, on the lookout. Sometimes too, I'll be a little busy and I made the trick. So most of the time, unless the days I'm free in the house, if I'm free in the house early in the morning, then I'll trade the 5 minute candles. But if I'm not really free, I'm a little busy making some other analysis, then I always should do the 15 minutes and the H1, okay? So that will be all for this lecture. Pay attention to what I've taught you here and revisit the video again. Test the market yourself, guys. Test the market, okay? Test the market yourself, and then you also become profitable. So see you next time. Bye.